Greetings. Thank you very much for joining us today. My name is Matthew Pillmore. I'm president of VIP Financial Education. This class is perfect for somebody that really just wants to understand the ins and outs of real estate investing, how to build long-term wealth one house at a time. So you really just have to be able to understand that whether you want to own one property or whether you want to own 10 properties, it really doesn't matter. This is going to be something that you will find valuable. Also, we want to start talking a little bit more in detail about how to apply cash flow stacking in order to expedite your goals. We're here to provide an ongoing curriculum of courses that will help you maximize cash flow, but it'll be well worth your time. Let's go into today's presenter and give you a little background on Charles Roberts. Charles Roberts and I have known each other for a very long time now. He's the co-owner of Your Castle Real Estate in the Denver metro area. They have 5 offices right now with over 360 agents. He's owned rental properties for the last 13 years. He's done many fix and flips along the way. He's a registered agent, a registered appraiser. He's been in the lending industry for a number of years. And he's doing exponentially more deals every year than the typical agent. And this is the reason that we set our sights on Charles for teaching today's class, because he does specialize in the real estate investing, purchasing world. And he actually even hosts one of the largest investment conferences here in the Denver area. He was a commentator on 630 KHOW. We did a lot of radio together about real estate many years ago. Charles has been interviewed for numerous big stations here in the Denver area, including 9 News, 7 News, Nightline ABC, Colorado Public Radio, and he is one of 13 directors of the Denver Metro Association of Realtors, which has over 5,000 inside that organization. So that is not small time. You can see why we brought him in to do today's class. So you're learning from the best. Now, the reason our curriculum is so compatible with what Charles is going to teach you today is because Charles believes that this happens to be a wonderful time to buy and hold cash flowing real estate. And we're going to get into that in great detail. Now, before we jump right in, a couple housekeeping details that we must cover. The presentation is just for educational purposes, so numbers will be estimated conservatively to simplify the training. You're going to love everything you get today, just like all of our classes. The training is not, however, a substitute for financial, investment, legal, or tax advice. It's also not a promotion for either of our products or services. It's strictly for educational purposes. Now, for guidance pertaining to your specific situation or the governing laws in your state, please do consult with a specialist in your area, and we can help guide you in the right direction with that if needed. One last thing, and one of the gifts that you're going to get for making it all the way to the end of today's training is a free counseling session, which is included with today's class in order to help you safely get involved with real estate. And Charles and his team has graciously agreed to provide that for you. So I will explain how you can take advantage of that when we reach the end of today's training. One last item before we dive right in and start discussing a very enjoyable topic. You're really going to want to commit your undivided attention to this class. It's absolutely needed. So make sure you turn off your phones, remain distraction free. I recommend taking notes and writing down your questions so that you can get those answered during your individual consultation. And there will be several gifts. Now, before you can answer how to get involved in real estate, whether you've already purchased investment properties in the past or whether you're interested in perhaps pursuing your first, it's important to answer the question, why? Do you agree with that statement, Charles?
Oh, absolutely. Whenever I work with a client, I always make sure we have this sort of discussion on why do you want to do this? And that's what we're going to talk about right now is why would people want to buy and hold real estate?
Okay, so I can think of a pretty obvious answer to that question. What would be your first answer to this why question?
It's probably the same thing you're thinking, because you can build wealth over time. It's just really that simple. There's a lot of different ways that you can invest in real estate. What we're going to be talking about today is what I have done in my career and what I work with clients is building wealth over time in a very predictable, unsexy sort of way. And that's what makes sense. That's why we're talking about this, and this is why I do this with my clients.
So let me interrupt you there for a moment, because you said build wealth in an unsexy way, and yet I would argue that get rich slow is the new sexy.
Call it anything you want. There's two basic ways people try to make money in real estate. They try to do fix and flips and make $50,000 in 3 months. And then there's the other group of people who buy property that makes sense, they rent it out, they deal with the problems that come up, and they build wealth over time. And that's really what we're going to talk about, is the latter, simply because that's what I like to do. I've had 88 closings so far this year, and most of my closings are for normal people who have some extra money and want to take some of that money and diversify it and build wealth over time. And essentially, we're on track for most of these people to pay them off in 13 to 15 years. So if you're 30 years old, you buy a $150,000 place, you pay it off in 13 years. If it goes up about 6% per year, which is average over 13 years, you're going to have something like maybe $225,000 worth of assets in 13 years owning that one property. That's what makes sense to me, and that's what we're going to talk about today.
And that's if you choose to stop at one. We've got a really special treat for you a little bit later in the presentation, showing you how you can actually expedite that result far more quickly if you chose to, if you didn't want to stop at one. So we'll get into that a little bit down the road. So you're talking about wealth development, and my understanding is that real estate has been a contributing factor to ultimately the largest development of wealth inside our country. Is that a true fact?
Yeah, that is actually true. There are more millionaires built on real estate than on anything else. This is not a secret. Real estate over time goes up about 6% per year. We're going to certainly talk about what we've seen over the last couple of years. And that's actually the next point right there. We had a large downturn the last 4 to 7 years, depending upon what part of the country you're in. And what's happened is there has been an enormous transfer of wealth during this downturn. And you have to go all the way back to the 1930s during the Great Depression to actually have a larger transfer of wealth than what happened right now. Unfortunately, a lot of people lost a lot of homes in the last, say, 6 or 7 years. What happened is prices went down, and over the course of the last several years, another generation of investors have been purchasing these for the long term, buying them at real values, paying them off over time, and that is going to see an enormous transfer of wealth to these new investors.
That's really interesting. Probably something you want to participate in, I would imagine. And you know how we feel about the banks here at VIP, Charles. It would be safe for me to assume that there is a significantly better return on an investment by pursuing real estate than what you could get from any tool in the bank. Is that a fair assumption?
It's a fair assumption. So let's say you want to open up a savings account. What are you getting? You're probably getting about 0.25%. If you do a CD, if it's a really great 5-year CD, you're probably getting about 1, maybe 1.25%. My folks are getting about 20% return on their money, and we're going to talk about that more. Some are 30 to 35, some are in the maybe 15 to 18%. But any way you look at it, if you want to be more of an active investor, not just buy a bond, but actually buy a house and do the work required to own that house, the return is enormously larger. And that's why you're probably listening to this, and that's why another half an hour we're going to tell you more about it. This is why people are doing it, because there is an enormous potential return for doing something really rather simple, buying and renting a house.
So I think earning money is probably the why for most people. Nobody is landlording because it's a lot of fun. The money has to be the attraction for almost everybody. So what would cause somebody in a market that's proven itself to be very profitable to decide against real estate? It would probably include the risks, right?
Absolutely. And this is what I like to talk about a lot. And let's just get this out of the way. This is not some sort of late night discussion that you're seeing on cable. This isn't you can go to Florida, you can go to, Maui and make millions of dollars and hang out by the pool. It takes work, and there are risks if you want to be a real estate investor. If you don't want to take any risks in your life, then you shouldn't do this, and I would beg you not to get yourself in trouble, because a lot of people do think that this is just easy and it's fun all the time. And the fact is, give me a call. I will tell you about some unbelievable situations that occasionally I run into once a year or once every 5 years with one of my properties. So do understand, owning real estate is an active investment. It is not like a bond. You want to buy a bond, you get 1%, it's not active. You want to own real estate? It might take a little work. You might make 20 to 50% though, and that's why you want to do it. It's not without risks. You're going to have some bad days. Now that said, I've had lots of tenants. I will tell you that I might have one bad day per year per tenant. It's something like that. It's not every day, but you're going to have some. You're going to have some tenant complaints. Someone's going to have a leaky roof. You're going to have a lawn that needs mowing. You're going to have some vacancies once in a while. Just yesterday, one of my tenants called me up, and just so you know, I manage my own properties, and he said, you know what, my fridge isn't working. And we had talked about it for a while, and I said, hey, no problem. I'll go get you a new fridge. Not a big deal. It's a $200 fridge. I'll take care of it. But you're going to have things like this. Therefore, you should make a good return by making this a part of your life. And if you do this correctly, you will make a great return. But in the end, what I ask you is that you decide, does it make sense? Do you want to do this? I think there are plenty of people who really just shouldn't buy investment property. It's just not part of their lifestyle. They don't want to get a phone call from some guy saying, I need a fridge. For me, I'm okay with that. I make a lot of money from it, and that's up to you to decide if it makes sense to do this.
I couldn't agree more. I would say probably the most common objection that I've heard from our student body about why not getting involved in real estate happens to be, it boils down to the headache. And a close mutual friend of ours, which is a very active real estate expert, he argues that cash flow is the aspirin that solves all landlording headaches. The more money that you have cash flowing every month, you can just throw money at almost any problem. When you talk about the lawn needing to get mowed, when you talk about a leaky roof, when you talk about a hot water heater that just went out on one of my rental properties that ended up costing me $1,400, which is probably $700 too much, but the property cash flow is $900 a month. It's very easy to make decisions like that quickly without allowing it to interrupt your day-to-day life. And again, the headache is very short term. And that's a positive thing to keep in mind when you're considering real estate. People who bought based on speculated appreciation were the ones that got themselves into trouble. The people who purchased based on cash flow on a monthly basis seem to really minimize and reduce the risks that you were describing there. And that's been my experience as well as a real estate investor. What do you think about that?
I 100% agree. What I would advise you listening to this is don't think that you're so smart that you know when to buy, that someone says, oh, this is the neighborhood to buy. The fact is, the market is pretty liquid. What I advise my clients to do is, do you have a 15-year plan? Do you want to buy a property and have some good times, have some bad times, and over a long period of time make a lot of money? Almost certainly. That's what I would advise you to ask yourself. Thinking that you're so smart that you know which house to buy or which condo complex is going to go up, in my experience, we're not that smart.
Okay, but you're speaking specifically about the potential of appreciation, not necessarily addressing the right and or wrong about purchasing a property that does or does not cash flow. Because I saw people make significant sacrifices towards their cash flowing a property on a monthly basis 5, 6, 7, 8 years ago. And those are the ones that ended up in trouble. And I've done it before as well. I've made mistakes along the way. I even short sold a fourplex that I bought because it was negatively cash flowing and it had dipped in value by half. It lost $180,000 in value over a 6-month period of time. And I made the mistake of buying based on speculated appreciation. What do you tell somebody about the concept of buying based on the here and now of cash flow as opposed to the potential of this property might be worth something that it isn't right now?
I agree with you 100%. What Matt is saying is don't take major risks. Don't buy a place that's minus $300 a month because you think it's going to go up 20% next year. Let me tell you right now, you have no idea. What we're saying is the same thing. Buy properties that make some sense, that are conservative, that cash flow something, because a furnace is going to go out every couple of years. Something's going to happen. My advice in real estate is be as conservative as you can, because bad things sometimes happen. But if you're conservative, if you have positive cash flow that you're building up, you will be able to overcome any problems that come along. You'll pay it off and you'll have a lot of money. That's what my clients are doing. And if you ever give me a call, that's what I'll tell you that I've been doing, and I'll show you what I've been doing. And one of the questions you're going to ask me is, Charles, you're kind of a busy guy. What the heck are you doing managing your own properties? And that's what Matt was chatting about. I teach a class with one of our colleagues, and we kind of just talk about this for 2 hours because he doesn't manage his properties and I do manage mine. Fact is, it doesn't take very long. I like to be involved. I want to know what's happening. It's a decision I've made. In the end, if you buy some properties, you're going to make that decision. But just so you know, 13 years later, I'm still managing my properties because I prefer to do it that way.
And it's all about a cash flow factor.
Yeah, absolutely.
Because if you don't want to manage it, you're just paying somebody else to do it.
Yeah, I can pay somebody 10% to do it, and I can actually make an argument that I probably should be having somebody else do it, but frankly, it's just not that hard, and I want to know what's going on, and this is a lot of my retirement, and I'm a really active guy. This isn't a bond. This is a job. It's a job that maybe takes me an hour a week, but it's a really important hour a week, and I have a lot of money tied up in my properties because I've owned them for a while, and I want to make sure they get taken care of.